Hello everyone, welcome to Smart Money Tips. My name is Mary. Thank you for stopping by today. Thank you for supporting the channel. We appreciate your support and your comments. On Smart Money Tips, we talk about banking and finance and we'll learn various ways of making smart money choices. In today's video, we're going to talk about how to improve your credit score. We'll give you some tips that will help you in your journey to improve your score. So let's get into it. So we'll start with what a credit is. Credit is a way of borrowing money or accessing goods and services with the understanding of paying later. In most instances, the lender is compensated with an interest. What is your credit history? So your credit history is information that the credit bureau has about you of how well you've managed credit in the past. What is your credit score? Your credit score comes from your credit history. The credit bureau, based on the information they've gathered about you from lenders, financial institutions, and retailers, assign you a score. This score tells lenders how well you've managed your credit, and based on that, lenders decide one, whether to give you credit, two, how much credit to give you, and also what interest to charge you. In Canada, the credit bureau is made up of two big institutions. It's either Equifax or TransUnion. So they collect your credit information from banks and other retailers, and they assign you a score. The score ranges from 300 to 900. So from 300 to 659 is considered poor. From 660 to 712 is considered fair. From 713 to 741 is considered good. And above 741 to 900 is considered excellent. So what makes up your credit score? How is it calculated? It's based on 5 major points. The first is your payment history. So any missed payments, any late payments, do you even pay at all, or are you missing your payments? How often do you pay? Are you making the minimum, or are you paying in full? This accounts for 35% of your credit score. The next one is how much you owe. It accounts for 30% of your credit score. The next one is your credit history length. So the length of your credit history, how long you've had your credit history, and this accounts for 15% of it. The next one is new inquiries on your credit score. So this will be any new credit accounts that you open, any new inquiries made by lenders from the credit bureau, and this accounts for 10%. The last 10% covers the variety of credits that you have. So do you have a mixture? Do you have a mortgage, a line of credit, credit cards, loan? So the mix of it also accounts for 10% of your credit score. So now, based on these 5 points, we're going to talk about some ways to help improve your credit. So the first thing to do is to assess your credit report or your credit score to know where you are at right now, and then plan on how to move forward. You can get access to your credit report from the credit bureaus. You can request by phone, by mail, or online on their websites. And this is free for Canadians. So in Canada, you can request a free copy from TransUnion or Equifax. On their website, it will show you the stuff on your credit report. So it will tell you exactly the information that they have about you. The reason why it is important to assess your credit score is to know if there are any mistakes, any discrepancies on your report. So mistakes can be in the form of your personal information. Maybe your date of birth is wrong or your address is wrong. It can also be some reports that are not correct. Some lenders can report late payments, but in actual fact, it wasn't a late payment. So you can ask the credit bureau to correct those mistakes. So that is why it's important to request your credit report. You can also assess your credit score from your bank's mobile app. I use CIBC and I can check my credit score through the mobile app. This is a soft check, so it does not affect your credit score. It is updated every 3 months on the app. I know CIBC has it, Scotiabank has it, and RBC also has it. You can use that to check your score, and then you can make a plan on how to move forward. So now that we know our score, how are we going to improve it? The first step is to make your payments on time. Make your payments on the due date, and if you can afford, pay your balance in full. Making payments on time does not only limit to your credit cards, it goes to your phone bill, your hydro bill, and any other credit facility that you have. Try as much as possible to make your payments on the due date, and try to make the payments in full. But if you cannot afford to make full payments, try to make at least the minimum payment and pay them on the due date. Do not miss payment. Do not make late payment, as this accounts for 35% of your credit score. So this is very important to stick to paying on time. You can set reminders, you can set alerts, or you can set up auto pays so that your payments are done without any late fees or any missed payments. The next one is to pay at least the minimum. I've already talked about that, but do try as much as possible to pay your balances in full, because if you do not pay in full, it incurs interest rates, and this builds up credit. In line with this, make sure that whenever you're making big purchases, you have the money for it. So try as much as possible not to use your credit card for big purchases, but whenever you do, you have the money set aside to make the payment when it's due. If you have a line of credit, use your credit card for the payment because of the rewards on the credit card, and then when it's due, use your line of credit to pay your credit card, because most often your line of credit will have a lower interest rate than the credit card, so you save up on some interest. So try that. Try to pay your balances in full, but also make sure you're paying the credit facility with the higher interest rate first before you go on to the one with the lower interest rate. So let's say you have a mixture of credit cards. Some credit cards have higher interest than others, especially the retail cards. Like let's say if you have a Hudson Bay card or a Home Depot card, they typically have higher interest rates than the bank cards. So concentrate on paying off the debts on those cards first before you come to the ones with the lower interest rate. Another point is, if you have variety of debt and it looks like it's being overwhelming, you are drowning in debt, you can talk to your bank to do a debt consolidation. So debt consolidation is when you put all your debts together as one. The bank gives you a loan to pay off all those other debts that you have, and now you have only one debt to pay, which normally comes with a lower interest rate. So you're saving yourself interest, and also you are making efforts to pay off your debt faster. So talk to your bank if you can get a debt consolidation, or if you do not have a line of credit and all your debts are on credit cards, you can get a line of credit because they do have lower interest rates than the credit cards. So you move all your credit card debts onto your line of credit and you concentrate on paying down the line of credit. If you have a mortgage, you can also put all your debts onto your mortgage because the mortgage normally have lower interest rates. So you can look at doing that as well. The next step is, after you've paid up your debts, do not close your credit cards, because how long you've had your credit also accounts to 15% of your credit score. So do not close them. Just don't have any balances on those old credit cards. Once in a while, use them to make purchases and then pay them off just to keep them active, because the length of time you've had your credit also improves your credit score. So do not close them, just have them active, but no balance owing on them. Okay, so after that, we come to a variety of credit that you have. If you only have credit cards, maybe it's time to look at getting a loan or getting a line of credit, because the variety of credit you have accounts for 10% of your credit. So what you can do is, instead of having only one credit card and using about 70% or 80% of it all the time, it will be best to have maybe 2 credit cards and you spread your payments on them, because it is best to have a credit utilization of below 30%. This also affects your credit score. If you're always maxing out your credit or going close to your credit limit, it affects your credit score. It brings it down. So try to have a variety of credits and spread your usage. Keep it down to below 30%. That way it helps to increase your credit score. So the next tip that we will talk about will be, if you're starting out, if this is like you're new to the credit system, try to get a credit card to start off. It's easier, it's easy to handle. You have some grace period. You have about 21 days from your statement to make the payment, so it gives you time to gather yourself and make the payment. Once you use and pay off, this helps you to build your credit and increase your credit score. But if you've had bad credit in the past and it's becoming difficult for you to access credit, then you can look at secured credit cards. That will also help you to build up your credit. So all in all, just follow these steps. Try to be consistent, because in everything, it's moderation and consistency. Keep your balance low. Do not owe or do not make late payments, and consistently make payments on your card. Consistently work at it, and you will see your credit go up. These are the steps that I use for myself. Right now, my credit score is sitting at 741, and these are the steps that I use to get to that. So I know if you try them, you will also be able to improve your credit. So try them. Let me know how it goes. If you have any more questions or any suggestions, please put them in the comment sections. And also do not forget to subscribe to the channel for more financial tips. Thank you so much for staying with us today. Take care of yourself. We hope to see you next time. Have a good day. Enjoy. Take care.